If you're struggling with trading, try my fair value gap strategy. There's no daily buys, there's no indicators, and you don't even need liquidity. It's the simplest model in all of trading that actually works. So in this video, I'm going to show you what the model is, and I'm going to give you the full free PDF in the comments down below that you can download. So let's get straight into the video. Okay, so for this model, the first thing you're going to do is you're going to get on the 4-hour chart, and you're going to look for a fair value gap, right? So we're going to get onto the 4-hour chart, and we're going to just look whatever fair value gap forms, and you can mark out every single one, but I'm just going to mark the most recent one in price action, right? The most recent fair value gap. And then what we're going to do is we're just going to wait for price to hit the fair value gap. The moment, price hits the fair value gap, we're going to get onto lower time frames and we're going to start looking for our entries. So we're only using the 4-hour chart just to find a fair value gap. That is it. So we've got our fair value gap now, and now I'll get onto the lower time frames. I'll show you how you can use this to start making money. Okay, so the first way to make money with this model is a sniper entry, right? And this is how you get these insane risk to reward ratios. So I know a lot of you are scalpers. You want a model that you can get in and out of. So I'm going to give you that model on the 1-minute chart. And there's also a second entry that you can get later on, which is more of a 15-minute day trading style. So what we're going to do is, for this part, is we're going to get on the 1-minute chart. And right here, this is our 4-hour fair value gap. So it forms at this point here in price action. And what we're going to do is we're literally just going to wait for price to return to the fair value gap. So our fair value gap forms, price chops for a bit, comes down. At this moment here, when price returns to that 4-hour fair value gap, that's when we want to look for our entry, and we just want to look to ride price up, right? So that's the whole, logic or, thesis behind it. But what we're going to do is we're going to zoom in on the 1-minute chart, and what we want to see, right? What we want to see is we want to see price hit the fair value gap, right? And then quickly start to move off, right? The moment it starts to move off, we want to look for our entries. And a quick and easy way of determining that is we want to wait for another fair value gap to form on the lower time frame. So remember, this right here is a 4-hour fair value gap. Let me just mark this out. This is our 4-hour fair value gap, right? Which we looked for right at the beginning of the video. What we want to see is we want to wait for the first bullish fair value gap that forms, right? We do not care about any bearish fair value gap, right? Because this 4-hour fair value gap was bullish, and the higher time frame always takes precedence, right? So the 4-hour fair value gap is bullish. We're going to wait for a 1-minute bullish fair value gap to form, right? We want to see price start to move off, and at this point right here, price starts to move off, and here is your fair value gap, right? Here is your fair value gap, and what you're going to do, right? What you're going to do once you've got your second fair value gap on the lower time frame is you're going to enter on that fair value gap, right? You're going to enter on that fair value gap like this, and this is such an easy way of determining the bias, right? You don't need to do anything fancy on the weekly chart. You just need to use this model, and it's enough, right? So you're going to put your stop loss here. You can, if you want to, you can put it here. And just remember, as all, like all things in trading, the tighter your stop loss, the higher the probability that you're going to lose, right? Simple. So, you decide where you want to put your stop loss. For me personally, I'm going to put it here because, I'm confident. I'm confident with the logic of the trade. I really do not want to see this. I really do not want to see this. And you probably had this before, where price comes and it just wicks out your stop and then goes in the opposite direction. I really do not want that, which is why I've got a wide stop loss. And then for your take profit, you're going to target at least, this is just my opinion. If you're on the 1-minute chart, it's lower probability, but you get more entries. And for me personally, when I trade the 1-minute chart, if you're not going to get free risk reward ratio, you may as well just use the 5-minute chart. Right? There's really no point. The only good thing about the 1-minute chart is you can get a lot better risk reward ratios. So for me personally, I would never aim for less than a 3-to-1. If I'm on the 1-minute chart, right? If you want a 2-to-1, just use the 5-minute or even the 15-minute chart, and you can get that really easily. But I guess the good thing about the 1-minute chart is we can get some insane risk reward ratios. So for a minimum, you're going to target a free risk reward ratio. And here's some nice liquidity, right? Some nice liquidity here. And of course, this is Asia's high, right? So typical, this is a London session, but this would work in any session, right? New York, Asia, and AM session for futures, PM session. What we're going to do is you can target this high here, right? For 1 to 6. And this is how you can pass your prop firm in one trade. Now, I'm obviously not condoning doing that, but I know some of you are going to do it anyway, and this is how you actually do it, right? You wait for the 4-hour fair value gap, which really acts as your higher time frame. You wait for confirmation on lower time frames, and then you target whatever risk reward you feel comfortable with. Okay, I'm going to give you guys a bonus tip, because I know a lot of you are asking about this, and some people are asking, hey, how do I add liquidity sweeps to this to make this even higher probability? And right here, you see all this chop here, right? You see how we have all this chop. This is why I don't buy. There's a tiny little fair value gap here. I don't buy it because we're chopping around, right? You don't want to buy it in chop. You want to wait for price to actually start moving, right? So this right here, and don't worry if you don't know this, because you do not need this to make money. The guy who made 10K in a day, he did not use liquidity sweeps at all. He struggled with it, but this model is what made him profitable, right? He did not use liquidity sweeps. But right here is our liquidity sweep. See this low, price comes down, takes out the low, and starts to move off, right? And this is our fair value gap entry, like that. So for those who are wondering, hey, you know, how do I add liquidity sweeps to it to add to the probability? That's how you do it, right? Because, you know, some people would buy, like, let's say this fair value gap in this chop and then get chopped up, get their stop loss taken, only to see this happen. But what's really happening is price is just consolidating, because, you know, we're kind of early London session. We have our liquidity sweep, fair value gap forms, and then price shoots off massively and aggressively. And this is how, you know, when you're on the right side of the market, you'll know, because you'll see massive moves like this, right? Massive, easy moves on the 1 minute chart. I mean, you're in this trade for 244 all the way up until, well, like, not even an hour, right? Like 40, 50 minutes, and you're making, you know, how much? You know, 6K in a day. So very easy, 6K in an hour, really. So very easy model. And I know not everyone here is a scalper, so I'm going to show you a 15-minute day trading strategy using this model too. Okay, so here we are on the 15-minute chart, and this is the 4-hour fair value gap, right? It forms at this point here, and you can kind of see we've got the high here, and we've got the low here that forms the 4-hour fair value gap. Right here is what we just talked about on the 1 minute chart. Price hits the 4-hour fair value gap, we get our little entry here, and price shoots off, right? And you know it's on the 15-minute chart. There is no entry at this point in price action. But because this is the 4-hour chart, what we've had is price touches the 4-hour fair value gap, shoots off aggressively, and then slowly starts to retrace. Your second entry can be at this new fair value gap that forms and ride price up. So what that actually looks like is, instead of waiting for a fair value gap to form on the 1 minute chart, the moment price hits this 4-hour fair value gap and shoots off, the first fair value gap that forms, you want to enter on. So what that actually looks like is you mark out this fair value gap on the 15-minute chart, right? And then that right there is your entry, right? That right there is your entry. And this is a really high probability day trading model. So, you know, if you're a day trader, you know, you've got a 9-to-5 job, this is the model you want to be using, right? If you got on the 15-minute chart, because this is an insanely high probability, because you've got so much confirmation. You've got, I mean, look at this, right? Look at price massively shooting off in your direction. All you've got to do at this point now is enter on the new 15-minute fair value gap at this point right here. So what that looks like, enter here. Now for your stop loss, this depends on the trader, right? The safest stop loss is here, right? Now this isn't a liquidity sweep trading model. If it was, your stop loss would have to be at the low. But because it's a fair value gap model and it's on the 15-minute chart, it really does depend on the trader. For me, minimum, absolute minimum, my stop loss would be is at this low here. But you know, if you were aggressive, you know, you could put it here. But just be careful, price could hit your stop loss and quickly go to take profit. So for me, bare minimum, my stop loss is going to be here. Safest one is here, but minimum stop loss is going to be here, right? Now you'll notice this chopped around a bit. Now the reason it does that is because we're entering not at a key time of day, right? So this isn't in London, New York, or Asia, right? This is at a almost dead time of day. But this is a valid setup, especially if, you know, if you're a short-term trader or even a swing trader, and you want to hold on for, you know, a few hours or even like a day or two, right? This is a, you know, this could be a great sniper entry. And then what you're going to do is you're going to target at least a 2-to-1, right? You know, you can get, I mean, look at how easy this is, right? If you want an easy bread and butter 2 risk reward ratio, this is how you do it. And you will find it every single day on one of the major currencies, right? And gold as well. You'll find it on one of those currencies at least once a day. You'll find a setup if you look hard enough. And if you get a 2-to-1, I mean, you can get 60% win rate with this, which is way more than enough to be profitable. But anyway, minimum you're going to do is target a 2-to-1. For me personally, I'm going to target a 3-to-1 like this. And you know, you can target liquidity all the way up here. But remember, 15-minute chart, and the higher the risk reward, you know, the longer you're going to enter the trade. And you do get it here. And you know, if you really wanted to, you know, you can target here. And right here, this blue line, by the way, is higher time frame weekly liquidity pool. So, you know, if you wanted to target the, you know, the overall liquidity and you want it to be like a swing trader, this is what you could do, right? This is what you could do, but you know, it is what it is. Right now we're in live price action, right? So who knows what could happen? Price could retrace, or it could go straight to take profit. That's all you need for this model to be a profitable trader. 4-hour fair value gap and a 15-minute fair value gap, or even a 1-minute fair value gap, depending on whatever your entry time frame is. Make sure you always use a 4-hour fair value gap. The entry time frame doesn't matter, but you have to use a 4-hour fair value gap. If you don't use the 4-hour fair value gap, this strategy will not work, right? So you have been warned, and you get the full free PDF in the comments down below. So make sure you download it, and make sure you watch this full 2-hour trading course where I teach you everything you need to know, including things, like risk management and psychology, because this alone will solve all your technical analysis problems, but it will not solve your mindset problems. So make sure you get the PDF and then come back to this video and watch this 2-hour trading course on screen now.